focus in on the new regulatory norms for MFI demand, what the outlook is. And joining in right now to discuss that is Shalabh Saxena. He's the MD and CEO at Spandana Sphoorty Financial, as well as HP Singh, the Chairman and Managing Director at Satin Credit Care. Thank you so much for taking time out. Mr. Saxena, just to begin with you then, most NBFC MFIs have posted pretty strong growth this time around. What's your outlook, and can you give us a sense as to what exactly is driving this confidence?
Good morning to you and your viewers. Yes, the numbers in general at the industry level have been very positive. One of the reasons that we can very clearly see is the improving asset quality. We've been in Spandana maintaining that this is a risk management business more than an asset management business. And hence, it's very important that if you are able to really manage the quality of the portfolio, the outcome will be the results as what you see. And overall, at an industry level, I think all the companies have done well in terms of really monitoring that key aspect. So improving asset quality is number one, is what I would want to put. Apart from that, most of the MFIs, or at least we are almost 90% rural. This is a credit hungry and a credit, the demand of credit in this segment, which is the bottom of the pyramid, and women entrepreneurs is pretty strong all through. And hence, if you look at the overall picture, the demand being strong and the quality being good, it augurs well for the industry. One last point I would want to make is the operating environment for the industry also has improved quite a bit. From a customer point of view, they realize that it's important to pay on time. This sector has seen a high resilience, and it's never the intent which is questioned. It's always the capability, which in a COVID kind of took some beating. But for the past 2 years, I think we have seen good traction both on the demand as well as the quality side.
Good morning, Nikunj Dalmia joining in. I have a very simple question, Mr. Singh. Our understanding of the rural economy is that the rural economy is under stress. That's a channel check which two-wheeler companies are telling us, FMCG companies are telling us, auto companies are telling us. If the rural economy is under stress, where is the credit demand coming from? I mean, are these weak borrowers who are right now borrowing because they're desperate and they will have problems in paying back?
No, I don't think so. That's there. I think there are a couple of points which have to be kept in mind. One, when we talk about the rural economy in stress, we are talking about products. There is a difference between the credit demand, which is a service-oriented industry, and the product demand, which is there. When we talk about two-wheelers, when we talk about the FMCG, everybody talks about rural stress technically because it's product. Now, products are based on, the demand is based on so many other factors, not just related to the economic activity of the rural areas. Why we have a robust growth coming in the rural sector, which is there, is because of the sector, because of the points which Shalabh mentioned. But besides that, I think it's been that the economy has really picked up in the rural space. The income levels are getting better and better. The monsoons, which have been fairly normal, the kharif sowing and every other sowing in terms of the crops and pulses are far more better, and it's the hectareage area is increasing. The pent-up demand of the COVID, probably is also coming up. And to top it all, I think, for us to look at this, the states where we operate are practically under-penetrated in terms of microfinance activity. Now, once we say that pent-up demand, which has been there because of under-penetration, all these activities probably being there, that stress is not there for microfinance. And that's for sure. And that's the reason why everybody is talking about a 25% plus growth, in the coming years as such.
Mr. Singh, what about the ability to pay back? That's my second point. I mean, let's be clear, whether it is product or whether it is economy or whether it is COVID comeback, the income levels in rural India post-inflation have not been very high. So in hand, what you are getting after spending is actually less. In that, if the microfinance market is growing, what happens to the repayment capacity? That's my very basic question again.
So the credit bureaus actually work on over-indebtedness, and there's a lot of RBI directions as well as the household incomes which we track and look at before we actually disburse a loan. And that's a very key example for us to really look at, that whether the household is under stress in terms of their paying. So the ability to pay technically arises from that. They are not over indebted to that sort. That's number one. And the second is, which is there, rural households have not one stream of income. They have at least a bare minimum of a couple of streams of income, which is there. Revenue comes in from farming. Revenue comes from, cattle, dairy farming, as well as cattle rearing, or they would have some kind of a small scale, or a cottage or a micro entrepreneurship business activity which is going across over there. So that ability technically is not challenged at that point of time. So it's the household foyer which is taken into account, the revenue streams which are probably coming in, and that's probably one of the key reasons that ability is not under stress if you really look at this.
Mr. Saxena, I wanted to bring you in the discussion and ask about how the competition is in the sector, because of course of late a lot of fintechs have come into the space. P2P lending, etc. is also increasing quite a bit. Overall, your take with respect to how the competition is in the MFI space?
Before I come to your point, to Nikunj's point, inflation in my view, or a food inflation in our view, is good for our customer, because our customer is the start of the economic cycle. So that's point number one. Point number two is with the huge spending which the government is doing in terms of infrastructure. What has happened is that the distances are reducing and hence markets are expanding. So our customer, who's at the beginning of this whole economic cycle, has seen the markets expanding, and hence that extra added income that we've seen over the past, almost about 4-5 years. To your point in terms of fintech and competition, well, let me say that the industry is underpenetrated, as Mr. Singh mentioned. There's a huge demand. The penetration levels, the various reports around penetration levels at a conservative level are at about 55%, at a reasonably aggressive level are at about 38%. So even if we take at a 50%, that's still a headroom. The most important thing is the execution and how well you execute. The last mile delivery is what the microfinance companies cater to, and dare I say, they kind of reasonably excel in terms of running this whole shop in a very nice manner. All of this put together, fintech, to your point, it's still some distance away, because our customers, when you talk of 90% rural, are people who are still at a very primitive level. At some stage, yes, you will see some amount of competition coming in from the fintech, but we are still a few years away. Now, this is my take on this whole thing.
Now, Shalabh, let's understand the credit cycle for a microfinance company, especially in terms of NIMs. We've gone through an expansion in interest rates. Beginning of the credit cycle, normally microfinance companies will have a huge advantage because you will be taking deposits which will be repriced later on. Now that interest rates are coming down, what happens to your spreads?
So, Nikunj, we have our loans are pretty short term, from 12 months to 24 months. And our experience is that even though a customer borrows for 24 months, the average product cycle is about 13 months. So, in a way, we have a positive ALM because our borrowings are coterminous. So, so it will be about 24 months. So, from a NIMS point of view, at least our company, a range from a 13.5, 13.6 to about 13.8, 13.9 is what we expect it to hold. And both move parallel. So at some stage, if the interest rates come down, then you accordingly reprice. And if it goes up, I think, we've matched out is our view. I think, from a NIM point of view, I would hazard a guess that we are pretty much in the sweet spot from a 13.5 to 13.8, 13.9. And it moves parallel, more so because of the short-term product cycle that we operate.
Okay, gentlemen, we'll let you go on that note. Appreciate you joining us on the show at this point of time. Just